So with that, I want to go ahead and talk about, again, a presentation I saw last week, and it was here in the Coachella Valley. And it was a good presentation by someone, economist named Dr. Christopher Thornburg. He's a founding partner with Beacon Economics. And he does a presentation here in my market every year. And so he did that one last week. And by the way, I think I attributed or mentioned in a recent program of ours, as Jeff points out, I always say, beware the headlines. Well, Dr. Thornburg, I have to give him the attribution for that. I mean, he's the one where I first heard that term in last year's presentation. I really thought that was dead on accurate in terms of, how to think about all the news we see out there. And so, just understand that that's where I got that. So he starts this presentation with "out of the woods?" ? And of course, that seems like an appropriate question, right? Because we've gotten all this information that tells us we're in deep trouble from the economic standpoint. Well, his take was, we're not out of the woods because we were never in the woods. The economy has actually done pretty well. The economy has performed in a fairly strong fashion. And so first thing he pointed out then, after declaring, hey, we were never in the woods, things are relatively fine. He pointed out, of course, what for some of us who know anything about economics, excess demand causes inflation, not recessions. And one of the things he pointed out about what you see in the economy, what he sees as an expert, is that the higher rates that we've been seeing and dealing with have been offset by high liquidity and low private debt levels. I've certainly seen that in my market, high liquidity. There's all kinds of cash transactions out here in the housing market. It's remarkable how much money is floating out there. And it was interesting to hear Dr. Thornburg talk about private debt levels are relatively low, even though we recently have talked about credit card debt has exploded to the point it's over $1 trillion in the U.S. in terms of aggregate total owed. Well, Dr. Thornburg's point on all that is, while we're seeing some increase in personal debt levels like credit cards, auto loans, et cetera, relatively speaking, it's such a small portion of the total economy, it's not been a major factor. And he also stressed that he believes consumer demand will remain strong, and that's going to keep the economy going. He then touched on California. And California, of course, that's where we're at. I do loans throughout the state. And his declaration about California is all the discussion and debate about, how good or bad the conditions are in California kind of misses the point. For example, with housing, he argued that housing really isn't about affordability per se in terms of, they're not affordable because of interest rates. He couldn't emphasize enough, it's all about housing supply. California's problem is lack of housing supply. That's really what's creating this affordability problem, if you want to call it that. So it's really more about housing supply, not so much about where rates are, generally speaking. And then also he argued that California should focus on revenue reform, not higher taxes. And I think part of the revenue reform issue is California's got a bit of a problem. Too much of the California tax base is based on very high income individuals. And there's sort of a gap between high income individuals that pay most of the income tax in the state and lower income individuals who pay sometimes little or no income tax. So there needs to be some sort of, kind of reorganizing the tax base or more importantly, the revenue side of things to try to get it more evened out. He also argued that the state should be focusing on upskilling workers, not paying them more. He did have discussions about $20 an hour for fast food workers and so forth. His argument was we really need to focus more on getting workers more skilled. And that doesn't necessarily mean college. He talked a lot about trade schools, for example, and having more and more people look into trade schools, plumbers and electricians and auto mechanics and so forth, which are very high paying jobs. And then that could certainly help our situation. And of course, the other point he made was about California, and I think he was talking more about the California government, is, don't fix it. Just get out of the way and let things go, give people more freedom to kind of pursue these other points, and then things are going to get better. He did identify some risks. record federal deficits with no end in sight, and asset prices remain at pretty high levels. So he did point that out as a little bit of a concern, but overall, he was pretty optimistic. And lastly, in the real issue, as you see in the bottom right of the screen here in the yellow box, and this is where I borrow from him too, he says the narrative is running amok. He posted all kinds of news headlines about, talking about or describing the economy in deep trouble, blah, 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 when in reality, he just finished this presentation giving us all this data saying, hey, the economy is pretty good, not just in California, but nationally. And of course, he also touched on the fact that political chaos is in its wake. And one of the most interesting things he said during this presentation is, of course, we've all heard about food prices and, inflation in terms of, going to restaurants and fast food. And of course, that news article not too long ago where somebody posted that they bought a hamburger combination, hamburger fries and a soda for $25 at Five Guys. And like, oh my gosh, how can we, continue to deal with this? Well, despite all of that negativity, despite all those headlines, what did he point out to us? Restaurants in terms of, activity or how much business they're doing, 38% above what it was during the pandemic. So in other words, not only have restaurants recovered from the pandemic, restaurant sales are 38% above what they were before the pandemic. So isn't that interesting? Everybody's complaining about food prices. Everybody's complaining about how much it costs to go out and get a meal at a restaurant, and yet they're doing it. They're spending the money, which of course gets back to the other issue, which is there is more income, more liquidity out there than the media would have you believe. So anyway, this was a very good presentation. It was a little bit of counter to all the negative narratives. He had a relatively positive message about the economy, both in the state and nationally. And he basically argued that should continue. He does not see a recession coming, and he does see rates remaining elevated for an extended period of time. So again, just understand this information. By the way, I have the PowerPoint that for his presentation. If anybody's interested, feel free to contact me. I'll be happy to send you a copy. So I thought this would be really good to touch on, to let you know that, again, beware the headlines. From an economic standpoint, things are actually pretty good, a lot better than the news media would lead you to believe.